Good morning friends and welcome to the pre-market view. We've seen weakness across the global markets, and US markets were marginally down about 0.11% to 0.23% as we are going to see an important weekly jobless claim data being released where the expectations are that it's going to be much better than the market expectations, and that could pave the way for acceleration of the tapering program by the Fed. Also, European markets were down about 0.46 to almost about 0.9%. Mr. Mario Draghi, who is the president of ECB, has kept the interest rates unchanged as there is a higher risk of deflation across the Eurozone. And when we look at the Asian markets today morning, most of the markets are showing some amount of weakness. Nikkei, in fact, is weak for the past 3 to 4 days. Hang Seng is slightly up about 0.3%. Shanghai is also down, and SGX Nifty suggesting that we are going to open down almost about 20 to 22 points. In terms of flows, friends, FIs were net sellers in the cash market to the tune of 6 crore. The domestic institutions were sellers to the tune of about 180 odd crore, and in the index futures, we have seen the FI selling to the tune of almost about 460 odd crore. Back home, our markets continue to remain weak at the broader level. So banks, metals, and most of the other large cap names except IT and select pharma counters are showing a lot of weakness. We had seen a good amount of buying strength in the prominent IT names like HCL Tech, TCS to some extent. Infosys also ahead of the numbers was showing some amount of strength, but it was not really able to sustain any kind of a rally. And also some of the specific names in the pharma, particularly Cadila Pharma, we had seen a good amount of strength. It has actually shot up almost about 100 rupees in the past 2 days on the back of some of the approvals which they have got yesterday. On that note, let me invite Sadhna to take us through important F&O cues and ideas that we could have from the F&O side.
Good morning friends, let's have a view on derivatives. Yesterday we have seen that market participants remained on the sidelines ahead of the events lined up today, due to which they have squared up their long positions. As we can see, 0.28 lakh shares were reduced in open interest, and Nifty cost of carry also decreased. And on the options front, we have seen that put call ratio is at same level, 0.92, but call option has added more number of shares than put option. As we have seen that call option has added more than 10 lakh shares in open interest, and put option has added around 8 lakh shares in open interest, which is clearly visible in the options activity. As we can see, 6,200 call option stands with highest number of shares in open interest, whereas put strike of 5,900 followed by 6,000 strike has seen a good number of activity in open interest front. Our intraday support would be 6145 and resistance would be 6200, and securities in band period is not today. And yesterday FIs were net sellers in future and option segment of approximately 600 odd crores. Overall, our bias for the market is negative as we are trading below our weekly VWAP, and as we expect today, market may remain volatile and uncertain ahead of Infosys results and IIP data which is lined up during the day. Thank you.
Here are the important news and events that we are tracking today. First of all, we would have IIP data by 5:30 today evening, wherein the expectations are that it's going to be about 0.8% versus minus 1.8% in the previous month. And IndusInd Bank is going to be releasing the numbers where the PAT expectation is that of about 328 crore, almost about 21% kind of a growth. We have released a new fundamental stock idea, Supreme Industries, which is the second largest manufacturer of plastic pipes, and it's the only plastic company with a significant presence across the segments like plastic piping, industrial products, consumer plastic products, and packing material. We have seen this company consistently performing well despite the most difficult market conditions, and they've been able to double its revenue and more than triple its earnings in the past 4 years. We are setting a target of about 570 rupees for the stock over the next 12 months. Historically, the stock has been trading in the range of about 10 times to about 20 times forward PE. Currently, it's available at about 15 times FY15 earnings and about 12 times FY16 earnings. In other news, Oil Ministry is looking at moving to Cabinet for getting a higher price of oil for ONGC and Oil India. They are looking at a minimum price of about $65. Currently, they are getting somewhere close to about $40 to $45. So this would help them get a better price realization. Also, it would help the subsidy burden So this could be a positive for ONGC and Oil India. Government has deferred the Suti closure, which could have paved the way for the private company stake sale in companies like L&T, ITC and Axis Bank. Zydus Cadila has been the stock in the limelight for the past couple of days, and they have also gotten approval from the US health regulator to sell sirolimus tablets, which is used to prevent the rejection of organ transplantation. So this could be in 180-day exclusivity. So a big positive for Cadila Healthcare. One can look out for buying this on any possible correction in the next few days. India has increased the import duty on the refined edible oil by about 10% from earlier about 7.5%. This could be positive for the domestic oil manufacturers like Adani to Cargill, which is going to be a bit of positive for them. United Spirits has come up with some kind of a plan to sell its White and Mackay stake over the next few days. So this could be a bit of a positive for United Spirits. MTNL, they are going to get almost about 11,250 crore from the government for surrendering their broadband wireless access. So one can go long on MTNL with a stop loss of 17.15 and a target of about 18.5. And Hindalco, some negative news as the Alcoa's fourth quarter earnings have missed the estimates and the company reported a loss of about $2.3 billion. Overall outlook on aluminium production or pricing is not that great. So one can short Hindalco with a stop loss of 115.5 and a target of about 107. We have also released the new stock idea in our Alpha Picks category. The Raymond would be the idea which we have rolled out. The current price is about 278 odd levels and we have set a target of about 365. Just to quickly run you through main points. The main reason is that the stock has corrected almost about 9% in the last few days, and overall the benefits of the restructuring which they have undertaken are visible and the inventory overhang is clearly out of the system. So we think that the stock should do extremely well. The quarter 2 performance of Raymond was extremely good. We've seen improvement across the categories, and we think that the overall this branded apparel business would look very good in the next about 2 or 3 quarters. And we think that since the stock has been quoting at a very reasonable valuations of about almost about 11 to 12 times forward PE. Also the Thane land sale could go through at any point of time, which would provide some more upside for the stock in the near future. So we think that one can really look at buying this stock for a target of about 365. And if you look at the chart, it's been taking a support in this rising channel time and again. So we've seen this correction and it's very close to this rising channel, so it makes sense to do an entry over here. That's it from all of us, friends. Have a great weekend and see you on Monday morning.